at the beginning of this year. It is still quite, it is in its infancy, but it addresses a number of the issues that were already, I think, discussed, so I will not talk about those, and we'll stop here. Thank you.
Thank you, that's very considerate. So we come to Chile now, which is the last country on the panel, and Javier, I don't think I'm going to even attempt to introduce. Let me just go to you straight. Thanks.
Thank you. I have like minus 10 minutes to talk.
Yes.
So I'll try to be brief. So our chapter, it was written by Gonzalo Reyes and myself, and Gonzalo was one of the masterminds behind the pension reform in 2008. So as you all probably know, or most of you know, Chile changed in 1981, changed from a pay-as-you-go system to an individual account defined contribution system. At that time, the idea was that if you had a long career under a salary, you would have, at the end of when you get your pension, you would have about 70% of replacement rates. And now we're seeing that that's not the case. For females, it's about 35%, and for males are about 50%. Okay, so in this scenario, in 2008, there was a huge reform of the pension system that tried to improve coverage, improve adequacy, decrease cost, and strengthen the institutional framework. So in this slide, we wrote this chapter trying to see what happened to the inclusion of the self-employed into the system. Okay, so the system only covered those salary workers, and everybody could join, but of course, people that were not mandated to join didn't join. So the idea, one of the main ideas of this reform was to include the self-employed into the system, and it was mandatory for them the idea was to have a mandatory system for them to contribute. And specifically a part of the self-employed, or not all self-employed are eligible to be mandated because it's hard to reach them, right? So part of the self-employed, they work for a firm or for somebody, and they produce an invoice that then goes into the tax system. So one important thing to understand is that we have a very strong and very efficient tax system which was, you know, a very good base for this inclusion of the self-employed. So initially it was going to be a mandatory contribution, but at the end it ended up being a self-compulsory system. So after the first 4 years, we saw that about 65% of those that were eligible opt out, and around 35% contributed. So it's a kind of a half full, half empty kind of story. But still we saw some increases in inclusion for this type of self-employed people, okay? Out of those self-employed, most of them were already contributing to the system, which is also something interesting because it links to what we already heard, that in Chile we have a very, very low informal sector. It's about 15% of the labor force or the labor market. However, there's a lot of movement in and out from the informal to the formal, from the formal to the informal. So that's where all these gaps of contribution gaps are created. And again, that's why the system didn't work as expected. So the idea of including this self-employed was to increase basically the contribution density. We see that about 15% of those that are self-employed and contributed to the system are new contributors, and the rest are people that were contributing before. So in a way, it helped you know, building more savings. However, it did not include as much self-employed people as we hoped for. So just to wrap up a little, some key elements. This is just part of the reform. The inclusion of the self-employed was part of a much larger reform. It was with a very targeted population, the most formal self-employed. it was built on an existing platform of a tax declaration and a tax revenue. Also, we have national IDs that work very well. Most of the population have their number, and the ID number works for the tax revenue, for the passport, for everything. So we still are facing very important issues with gender gaps and also young workers, as it was previously said. So I think those are the challenges for including the self-employed and also the informal sector. I think probably soon we will have a mandatory, it's supposed to be a mandatory inclusion, so we'll probably see that 65% that opted out, they're not going to be able to opt out, so we hope to see some improvements in the near future.
That's interesting. Thank you. Thank you so much, Javier. Okay, so let's first go to the floor and let's look at questions. If you have questions for specific people on the panel, please mention that. Or you could even have a comment or some feedback. Yes, Carlos. Could we get a mic here, please?
Here.
Thank you.
Thank you. Javier, this is a question for you. I mean, what do you think is going to happen in the next coming years with the system? I mean, all the noise that is coming out from Chile, specifically regarding independent workers. I mean, you were able to attract 35% of them. So how has, I mean, are they opting out now? Are they continuing to save? I understand that there's a new proposal where you're trying to bring them on again. Is it going to be the same exact way that you tried the first time? What else can you share with us?
No, I think so.
Yes.
Yep.
So the initial idea was this was going to be mandatory, but at the end it ended up being self-compulsory, and at the end of the year when you fill your taxes you could opt out. Most people opted out. Okay, so the idea of these new waves of reform is that it's going to be definitely mandatory, and that money is going to be kept by the Internal Revenue Service, and it's going to be put into your account. So where I think there's an issue there, or there could be some unintended consequences, is that again we're thinking, or we're talking about the formal self-employed. These are the ones that, you know, they have this invoice. So it will probably create an incentive for those to go into the informal sector, right? And that's something that needs to be, you know, addressed in the near future if it happens. If the status quo stays the same way, we would see a 65% increase. So those that are opted out, they're not going to be able to opt out, and they're going to be included in the system. So more, you know, higher density of contribution, and also more people brought in that were not in the system before. So I still think Chile has a very, in many ways, people that has these boleta de honorarios, these invoices, are required to have them because of the employer also needs to, you know, say, okay, I spend this money on this person. So it goes to the cost of the firm. So for the most formal ones, I don't think it's going to change much the incentives, but for those that are in the middle, or those that are, you know, that can go into the informal sector, it creates those perverse incentives. So it remains to be seen. I think it's something definitely on the research and the policy agenda to see what really happens. And also this is part of a larger reform, and I now I'm going to take a couple more minutes, but I think it's, for those countries that follow and this is my own perspective, those countries that follow the Chilean model, they're now facing the same problems that we faced 10 years ago. And they need to address, okay, so what are we doing with this? This 70, we're not reaching the 70% of replacement rates that we expected. You know, we have a lot of these holes in the contribution, low density, people in and out, women are, you know, there's a huge gender gap, and all of these things we're experiencing for the past 10 years, because now we're seeing people really, the system is maturing now. So it was expected to be something, and now 10 years ago we start seeing the results, and it's not working as we thought. And again, a lot of countries followed us moving from pay-as-you-go to this type of individual accounts, and they're going to be starting to face these issues, and they need to start thinking on how to tackle them. Yeah.
John? Oh, yeah, sorry, yeah. No, Vijay, please.
Yeah. I think we heard from Mr. Mutuku earlier the very pertinent points of people dropping in and moving out of poverty, and which then impacts their ability to contribute, and in the absence of which getting penalized. Okay. So I would like to hear, how do you basically address this issue? And this is very pertinent in the context of low-income countries, whether you're talking about Asia, for that matter, more so in South Asian context, or in African context and other places, there is this huge, large proportion of people falling in and out of poverty, and how do you basically protect their sort of rights? And if you are going to be penalizing them for not having been in the system for some period of time, can technological solution, now with the technologies coming in, is it possible to basically be much more flexible in terms of managing those types of issues? That's number one. The other one I also wanted to make is the role of the government, can it be a market maker? Because again, what we have seen is that in the context of the Kenyan program, it is purely, informal sector workers, sort of a more private sector, quote unquote, driven, and where the role of the government seems to be more as a regulatory authority or as a manager and things. And then we saw in the context of Turkey that there is a 25% contribution where the state is making. So can the government be a market maker? And again, based upon the experience in different countries, how long should that particular contribution as an incentive work? For example, if you look at the Indian context, it is for about 4 years or 5 years or whatever it is the government makes. And then what we have seen is that sometimes that defined time period, when you say explicitly, also is not interesting for a lot of people to contribute, because they say, okay, I contribute for 5 years, the government is gone, then I have to not only contribute for myself, but also the contribution that I was getting in from the government. So how do I make it? Is there some experience along those lines? Because these are some factors which do sort of impact the uptake of insurance, particularly when talking about the micro-insurance, the low-income segments of the population.
Thanks, Vijay. May I make a suggestion? Let's take a couple of more questions and then divide up the answers here on the panel. John, you had a question?
Okay, thank you. I was just wondering about the ideal target audience, for target market for these initiatives. I know that early on today, somebody was saying there was this aiming at the 1.2 billion poorest. From what I'm sort of hearing, and from the experience in Albania, where we did some work, this seems, this is a provocation perhaps, that maybe the target market is really going to be those people for whom there is some traction from tax benefits. In other words, they are paid enough to actually be within the tax system, where there is some form of employer or professional group intermediation to provide the intermediation link. Because the technology can bring the horse to water, but you still need to make the horse drink. Which is the big challenge. And so in Albania, what we saw, the pension inclusion was very much targeted at those sort of middle income or lower middle income workers. And was this a problem? And, well, no, because it was coupled with a reform of the state system, which by targeting these workers and giving them some sort of additional pension benefit through a voluntary system, it gives fiscal headroom for the state then to focus on the poorest, who may not be so suitable for pension inclusion initiatives. So I'm just throwing this out as a thought that maybe, are we getting at the right target market and being realistic about what can and cannot be achieved?
Okay. Thanks, John. Yeah. Can we get a mic this side, please?
Yeah, I'm interested in the role of the government, and I guess particularly the potential mistrust of the people for the government. I mean, all over the world, we don't trust our government, and turning over money to the government is something that I don't know that everybody does willingly or with a great deal of trust. So I wonder if any of you have any particular perspectives on that, anything you've done to overcome that kind of mistrust, any communication strategies and that kind of thing.
Okay, thanks. I think let's address these three questions first. So we have a couple of questions from Vijay, one about mainly around affordability and also around the government as a market maker. And I think it's pretty much what both Evan and John have said, which is John talking about whether really the lower end of the lowest end of the income distribution, is that an appropriate market? And Evan really talking about whether or not we see citizens really trusting governments. And I'd like to just add one more question to this, is that, which sort of links up with what John is also saying and what perhaps Vijay is saying, that between the formal higher income population, which is perhaps already covered, and the really poor people who are at the bottom of the income distribution, struggling to make ends meet, and so on and so forth, I think there is a salaried workforce which is perhaps in micro or small enterprises, which by law ought to be covered, but because of poor enforcement or just poor compliance, tends to get missed out. So let's say workers who are working in firms with 5, 10 employees tend to get missed out from coverage. And that's the kind of stuff that we saw Darren actually quite effectively addressing. So it'll be great to get some insight on how you are, because that's a sizable, even in Uganda, if I'm not mistaken, the formal sector workforce covered by pensions is around 1.5 million. There's another 2.5 million salaried workers in smaller and micro enterprises who are excluded. So by law, they should be included. So what are your, what's your wisdom in this area? So let's look at these, address these 3 or 4 questions. Anybody? Yeah, Javier?
On the mistrust question, so it's interesting because in Chile, and this is just an example from Chile, the workers and actually society it mistrusts the private sector now.
Yeah.
So it's the other way around. They're calling for the government to intervene and to have a public fund manager. So this could work in both ways. I mean, we're thinking about, okay, so there's a lot of mistrust about the government, but there are lots of cases where you have the private sector, which can also be co-opting the government, etc., or having high, particularly in these things that are mandatory, that are seen like taxes and people don't really understand. So this is where financial inclusion or financial education plays an important role. In Chile, there's people marching in the streets calling for a deprivatization of the system because they really don't trust the private sector. So you really need, when you think about mistrust, you really need to think this in both ways.
So David.
Thank you so much. There's a fundamental question in my view, which probably we need to address when it comes to these low-income earners and their participation in long-term investment, long-term savings. Who should that role be? Is it the private sector or government? And in our case, we have seen even trying to reform the formal pension systems to allow some level of liberalization. So there's much more participation by the private sector in it. It has received considerable resistance from the members of the public. And people still think that the government should be able to protect this and be more in control. And because of that, this policy reform has dragged for years. In fact, we are not sure whether we are going to succeed with it. And I also think that for these low-income earners, I think the government should have a social protection policy to make sure that these people have some saving. Support them, support the initiatives, otherwise they'll not take off. It's going to be very difficult for individuals to make a business out of it, in my view, because once the element of cost starts coming up, most people are going to run away from it. They think it's going to be viable. And I think the government should be able to absorb much of this, especially the initial cost, until these schemes grow and mature to a level that they can be able to sustain themselves. And that is going to take some time, especially in our case. Thanks.
Yes, I want just to mention an example about all this that probably help to answer many of the questions that have been raised. With respect to this to this issue of how to make self-employed to pay or to contribute to a pension system. In the case of Peru, 2 years ago, the government introduced a legislation to make it mandatory to contribute for self-employed. People go to the streets. They make the law retired. Basically because they don't trust in private pension companies. There is a problem of I think in the region of in Latin America of legitimacy about a bad perception about pension firms. There is people think that they are getting rich, charging high fees, and as a consequence of this mistrust, there has been a new initiative 1 year ago that the government allowed that the mandatory savings of pensions get retired as a lump sum. We're talking about not a voluntary part, we're talking about the mandatory pension savings. And basically, this was a very popular measure. People practically were very happy that people felt rich at that moment. And until now, I think that the last statistic is that more than 90% of the funds have been retired. So, and basically, the main reason of this reaction and this crazy legislation is a problem of mistrust, but basically a mistrust in the private sector. So, I think in this issue there is an enormous challenge for policymakers in order to overcome this situation. Another point that was mentioned is that issue of how to create a market. For example, let's talk about this issue of automatic enrollment. How to introduce automatic enrollment in countries that are highly informal. Okay? Basically, in the case of UK or New Zealand, there is a basic ingredient, no, that you have a formal economy. So you can get the money, I don't know, easily compared to informal economies. So I think that it's necessary probably to think about other ways to approach to this idea of automatic enrollment. In the case of most of developed the pension system in developed economies are based on income flows. Okay, I think that it's a moment to try to think about how to make people contribute based on consumption flow. I think this is something that has been recently discussed in Peru. There has been an initiative in order to try to introduce a pilot program in order to try to find specific areas where the informal sector intersects with the formal sector. And for example, one area of consumption that is currently analyzed is some utilities that the informal sector pay. For example, the cell phones invoice or the invoice of electrical services, in order to try to get some contribution for the payment of these invoices. So I think that we need to think out of the box, no? If we want to to tackle this issue of pension inclusion.
Yes, come.
On the issue of distrust in the government, actually, in the case of Turkey, this was a major consideration because there were 2 failed attempts of mandatory saving schemes run by the government in the 1980s. So with that memory, people wouldn't be willing to face such a mandatory scheme again. That is why the government thinking has always been on a voluntary pillar instead of a mandatory pillar. But at the same time, there was a distrust issue with the banking sector. Turkey having gone through 2 banking crises. And then I think one of the results or responses to this distrust was the need for a generous incentive, which is the 25% matching. But the question of whether this is sustainable or not is, I think it's open. And then public sector itself, we saw in the graph, savings have increased, but this is a consideration for the medium term.
Thanks. Sorry, can we just, let's just, Darren has a point, and let's come back, I think, let's close with you. So Darren, on this question of what even David mentioned about, is there a way for thinking about auto-enrollments for people who are self-employed or in the informal sector?
We'd like to know the answer to that one. We're grappling with that even ourselves in the UK around the self-employed. And I think I will be having a chat with Chile shortly at the break. The main thing is for the, not self-employed, but the micros, I suppose, is making it easy and accessible and low cost and burden, which has been our big drive to make it a very simple process for them to obtain a scheme for their workers, to enrol their workers into it, and it is a digital approach. Most schemes have created a platform to do that, and actually you can sign up and get a scheme within minutes through that process. The interesting one on mistrust, even in the UK, probably echo the rest up here, that actually it's the government scheme, although it's not really a government scheme. Nest was created in the UK, which has a public sector obligation to enrol any worker. Most employers have gone with that scheme because they deem it, the government's backing it at this stage. They deem there's probably a government guarantee around it, but there certainly isn't. But they see it as a more trustworthy scheme to go with, and it is certainly getting the higher population going into that side of it. Just picking up on the government contribution side, it is an interesting one. Some would argue incentives from a government doesn't necessarily gain enrolment. New Zealand, they had quite generous incentives when it was first rolled out, $1,000 a kickstart just to get people enrolled, and a matching criteria of up to 1,000. If you put 1,000 in a year, you would get 1,000. They've started to abolish some of that, so the kickstart's gone, and they've halved the other contribution, and what they're saying is the uptake has certainly slowed down. People aren't going in at the rate as they were. Has that been the full reason? Don't know, but I suspect it would be part of the reason that people aren't doing that. I do think there's probably imbalances though. When government is providing a contribution, is it fair that it's pretty much the same contribution across the board? Maybe it should be scaled so actually the lower earners get a slightly higher contribution from the government if there is going to be one in place, and the higher earners probably slightly less. Maybe that's more a fair approach to doing it and to disperse that sort of contribution across different income levels.
Mr. Butuku.
Yes, I just wanted to address the first question about people dropping in and out of poverty. I think one solution is to bundle the pension product with other risk mitigation products. Most of this dropping out of poverty is due to certain events, risk events, which can be insured against, and also health events, which can also be insured against through health. So if you bundle the three together, that may make it more attractive. It will also address the problem of which I mentioned of low prioritization of saving for retirement compared to some of the other things. I think the only problem for us in Kenya is that the insurance industry is more mistrusted than any of these other industries. So, and may make it more complex.
Governor Rarawa, could we get last comment?
Just on the issue of trust, we're dealing with people who are being used to hiding the money under the bed. So now it's being put into this scheme, and it's important they see the balance every now and then. And we're trying to do this through the mobile banking so that they can have access to the balances. And one of the cause of distrust is, especially the financial institution, is the fees and charges that are imposed on these balances, and that is a source of friction between depositors and the financial institutions.
That's a great point. That's a great point. Thank you so much. So we're going to break for, so I mean, I still have these spots in front of me. So, but if I may stop the session here, we have a lunch break, and Will Price has warned me not to eat into, the lunch which we'll eat into his session. So I'd like to close here, but just a couple of small points on what John mentioned in terms of, so if there is, and I think it also sort of flows back to what Vijay was mentioning, the role of the government as a market maker, I think clearly seems to be the case across the countries that we are seeing on the panel when it comes to people at the lower end of the income distribution. So if there were people who were taxpayers already and are getting tax breaks, or are maybe not getting tax breaks but can save for themselves, I think the private sector should be willing and interested enough to step forward and get that money. So I mean, you don't really need to motivate an insurance guy to go and sell insurance to a rich chap, right? So, but what you do need is to be able to establish or to invest in building, public confidence and awareness and so on and so forth, which private enterprises will not have an incentive to do. And I think that's a role where the government should step in. And I guess there is a role, therefore, for the government to step in, as Eric is doing in Rwanda, in actually creating the market, but not stepping on the toes of or stifling the private sector, because what he's finally doing is he's providing insurance and he's paying that insurance cost out of the fisc, but is using private insurance companies to actually provide that insurance. So, I mean, I think, so he is playing the role of a market maker, but at the same time, creating an environment which encourages greater private enterprise and effort in pension inclusion. So thank you so much. This has been a tough session. We've had an absolutely stunning bunch of people who are, who've come all the way to share their perspective and ideas, and I'd like to give them a big hand for their participation. Thank you so much. And please join us for lunch. I think we close the lunch break at 2:30. We start with a session that Will is going to moderate post-lunch. Thank you so much.